Hey guys, welcome back to Lemuel's stock portfolio. I found something here that might be worth reading. We got two dividend stocks under $10 with 10% dividend yield. Now this was posted today from TipRanks. It says, dividend stocks are the Swiss Army knives of the stock market. When dividend stocks go up, you make money. When they don't go up, you still make money from the dividend. Heck, even when the stock goes down in price, it's not all bad news because the dividend yield, the absolute dividend amount, dividend by the stock price, gets richer the more the stock falls in price. Knowing all this, wouldn't you like to own great dividend stocks? Of course you would. Okay, we're skipping over this TipRanks database stuff. TWO, Two Harbors Investment. Looking at dividend stocks, it's natural to start with Real Estate Investment Trust, REIT, as these companies are known for their reliable high-yield dividend payments. REITs focus their activities on the purchase, ownership, leasing, and management of real properties in the residential and commercial segments. They will also, as Two Harbors does, invest in mortgage-backed securities. Two Harbors has built the bulk of its portfolio through investments in residential MBSs. Sorry about that. REITs are required by federal regulations to return a high percentage of earnings directly to investors, and they frequently use dividends to comply with that rule. Two Harbors is typical in this respect and describes three considerations in its dividend policy: likely economic returns on the portfolio, taxable income, and sustainability of the payment. Since paying the dividend as low as 5 cents in April 2020, the company has raised it twice. The current payment declared last month for third quarter of 21 is 17 cents per common share, or 68 cents annualized. This rate gives a yield of 10.5%, far better than the greater than 2% yield found among dividend payers in the broader stock markets. Okay, let's get on to the next stock because I know you guys want to see both of them. Okay, BlackRock Capital Investment. I've looked at this one before. BKCC. Next up, BlackRock Capital Investment is a capital investment firm catering to middle market companies, offering flexible financing solutions and making available a variety of secured and unsecured loan services. For investors, BlackRock, like other businesses, development corporations, aim to bring in high and reliable returns from its portfolio. BlackRock has been recovering slowly from the COVID-inspired economic downturn of 2020. The company's earnings turned positive in fourth quarter of 20 and have remained at positive levels since. The quarter two expected earnings per share of 7 cents was down from the 20 cents reported in quarter one. The earnings per share was based on a net investment income of $4.8 million. The company reported holding more than $571 million in total assets at the end of quarter two. BlackRock finished at the first half of this year with $17 million in liquid assets and $213 million in available credit, for a total of $230 million in funds available for portfolio deployment. All right, let's just... I want to read this next one. Actually, I'm just going to skip here. The most recent dividend declared for third quarter of 21 was 10 cents per common share. The 40-cent annualized rate gives a 10.5% yield. The most recent dividend was paid out on October 6th. All right. So there you go. Two stocks possibly worth considering. Maybe you wanted to hear all of that reading. Maybe you didn't, but BKCC and TWO, maybe put that in your dividend portfolio if you don't have it already. I'm going to go ahead and look further into them, but yeah, those may be worth considering. If you want to continue to follow my portfolio and see my longer videos such as these and my daily portfolio updates, then go ahead and subscribe. Thank you for watching.